supply and demand, which you just thought. So when the market is ranging, what actually happens? Is it that go the big boys, are they sleeping that time, or are they at rest when the
market never ranges. The concept of range, what we call range. I'm hearing so much noise on somebody's background. It's actually disturbing me. Who is that call, please? All right, I think it's better now. Now, what we call range in smart money trading is the movement of price from a level of supply to a level of demand, or from a level of discount to a premium level, or from a high to a low. What we call range in smart money trading is the movement of price from here to here, from here to here. This is our range. Okay, from here to here is also a range. From here to here is a range. Okay, as opposed to what we call range in retail trading. Now, what we call range in retail trading is what you're trying to call consolidation, right? So you're trying to ask what happens in consolidation. Now, for people who were in my LCT sessions, okay, sorry, let me minimize this. Oh. All right, can you see my screen?
Yes.
All right, for everybody who I taught trading from the LCT sessions, if there is one thing I always say is that I trade in consolidating markets. The only markets I don't trade are choppy markets. And I call it choppy because there's actually no move happening on my 1 minute time frame. That's the only time I can consider that the price is choppy or not tradable. Okay. If not, if price is consolidating, for those of you who are new, before this concept, I will always tell you to stay out of consolidating markets because there are no clear trends. But the fact is that your consolidate hunts our stop losses. That's not the word. They seek the liquidity that they created. They're always seeking liquidity. Okay. It is the retail traders that not view it as a stop loss hunt. They didn't ask you to put your stop loss there, and they're not after you. They're just going back to zones where they have created inducements to violate those zones and then continue in their direction. That's all.
Okay.
Okay. So it's like what's the best illustration I can use for you, girls? Something should come to my mind. Help me further. All right. For instance, you had a conversation with a friend of yours about some money you had stolen. Okay. And I come to your house the next day and I'm preaching about stealing and why you should not steal money. What will come to your mind? That your friend had talked to me about the money you stole, have you?
Yeah.
It's guilty conscience. Why do you feel that way? Because you actually stole money. The reason why we feel they are hunting our stop loss is because we actually set stop loss on those areas. What they are doing is just following their price action. That is how they like to move price. Create inducement, violate inducement. Create inducement, violate inducement. Now, retail traders sees inducement and believes they should be a nice setup. It is not their fault that you do that. But then they need your liquidity to enforce price. That is the fuel they have. Okay, so I don't like to call it stop loss hunt for myself because they're not actually interested in hunting your stop losses. We just have our stop losses on those zones. With or without your stop losses, the market will move.
Okay.
Yeah. So it is not too professional to call it a stop hunt. They don't care about you. So you make it feel like you're very important to them, and then they actually need your stop loss for a thing. That's why I don't actually use that word. Yeah. Okay, so can we make progress now?
Yes, sir.
Yeah, question. Question. I can't hear you. Please just mute your mics and go to somewhere you have proper network. You can ask a question in the comment box. I can't hear you at all. See how heavy it is wherever you may hear. Just mute your mic. I can't hear you. Just ask through the comment section. Your network is very bad. This this fella? Yeah, just ask your question in the comments in the chat section. I'll attend to it very fast. And then if you know you're sitting in front of your fan, please mute your mic, I beg. I'm just hearing the wind of glory. The wind of glory has been blowing in my ear. I don't know who that person is, but if you're the one blowing me this wind of glory in my ear, mute your mic.
Don't talk, Okada.
Are you on a tour? Okay, the person has muted it. God bless you. All right, so let's make progress. Quick progress. So the next concept, I just want to touch on this concept so we can move straight to the charts in our next service. Oh, in our next meeting. All right, inefficiency. Okay, let's talk inefficiency. So we've talked about liquidity, inducement, supply and demand. Now let's talk about inefficiency. Okay, now I said inefficiency refers to the inefficient delivery of price. I'm using grammar to answer grammar, don't worry. Let's make progress. As a result of heavy momentum, either bullish or what? Bearish, rapidly. And by so doing, creating a gap between candles, not closing in on each other. Okay, let's pause there and then take, let's pause and then do a few illustrations, make progress, okay? All right. Now, I said inefficiency refers to the delivery of price as a result of heavy momentum, either bullish or bearish, rapidly. By so doing, creating a gap between candles, not closing each other. The gap between candle 1 and candle 3. This is also known as imbalance or fair value gaps. In an inefficient move, the high of the first candle, okay, in an efficient move, the high of the first candle needs to meet the low of the third candles in a bullish move. Now, if this move was efficient, this high, okay, this high, right, has to meet with this low, right? So we're supposed to have this wick somewhere around here. Yes. Equaling this one. Yes. Okay. To show that this is an efficient move. But failure to do that, we have created a gap in the body. Please, who is that on the background? Oh.
Everybody can mute their mics now. When you want to ask questions, you mute them.
Your mics. Mute your. Okay, I think I'll just have to mute all. Sorry, give me a minute. All right, please, guys. Okay, everybody, just help me help you. Okay, I am trying pretty hard to do this, so just help me help you, please. Okay, so we don't have problems. I'm trying not to be like some of those other mentors. I think I'll have to adopt that style. If your mic is too noisy moving forward on my sessions, I'll kick you out of the session, irrespective of the fact that you may probably have paid to be on the session. And then you have to watch the video when it's posted on the group, so you don't stop the rest of them who are actually willing and then quiet enough to learn. Okay, so now the inefficiency or the imbalance or the fair value gap is in this space. Okay, is in this space, the distance from candle 1 to candle 3. Now, when I say candle 1 to candle 3, it must not be the first candle. That is to say that if a different price move forms here, that is inefficient. This becomes candle 1, right? And this becomes candle 1, and this becomes candle 3. The inefficiency is on this open and this close. Okay. If we had a candle prior to this one that did not deliver efficiently as well, and we have this wick here, and we have a space between this and this becomes inefficiency, right? This becomes candle 1, candle 3. The same way, this is candle 1, candle 3, candle 1, candle 3. Now, is candle 1 and 3 does not mean the first candle that formed or the third candle that formed. No, I'm just talking about the differential, so the difference between the candle that has the close that did not meet with the candle, the third candle. Okay, so this candle is the one with the close, but it did not meet with the wick of this third candle. So I call this candle 1 and candle 3. I cannot begin to count how many candles have formed before this one. I will not say, okay, candle 436 on your H1 time frame and candle 438 inefficiency. That would be quite stupid to do. Okay, so we have candle 1 and candle 3, candle 1, candle 3, candle 1, candle 3, as the case may be. Okay, this is inefficiency, inefficiency, inefficiency. Now, the logic behind inefficiency is that price must offer up inside that zone and feel it before continuing with the trend. Okay, price must offer into that zone and feel it before continuing with the trend. Now, I'll clear this very fast, and let me see if I can hide this. Like, I actually can hide this here. Charts. I'd like to explain that quickly on the chart. Let's move to a higher time frame cell to be prettier. And then I'll take questions. All right. Now, the distance between candle 1, right? Candle 1 here and candle 3 here. Okay, can everybody see this? Those who are quiet can mute their mics now. Unmute their mics, please. Okay, so we can talk.
Yes, I can see.
Give me a minute. I'm trying to. All right, I'm back. I had to take a call, please forgive me. Okay, so the distance or the gap between candle 1 and what's candle 3, okay, is our inefficient move. Now, notice that in the behavior of price, wherever we had a gap between candle 1 and candle 3, price always had to go back there to fill. This was a small one, right? But then we see had price go into that level, fill it, and then continue downward, okay? We had a gap inefficiently delivered here, right? And then price actually filled that all. I cannot keep marking all the inefficiencies of price. I'll only mark those at key zones, at our major zones that serves as an area of importance to us, okay? So when we begin to talk about analysis, you would understand why we mark what zones. So the efficient delivery of price is in ensuring that as price delivers, okay, let's trace it. Look at this week, right? Candle 1 here and candle 3. They are touching. If I put a line here, I will discover that I don't actually have a gap between the two of them. Okay. If I shift it upward, I have broken this. Right, fine. It has to be on the tip. Good. You see this, right?
Yes, sir.
Efficient delivery. Same thing happened everywhere. This week to this week, right? This week to this week, right? This was not efficiently delivered, but price went back up. In the movement of price going up, we had covered this gap. Okay. This is under inefficiency here, but price did what? On its upward movement, feel all of that. Okay. Now, where we expect a reversal is when we marry imbalance or inefficiency with supply and demand. Okay, I will get into that. But I want you to understand the logic behind inefficiency. The logic is that inefficiency must be filled. Okay, inefficiency must be filled. Imbalances must be filled. That is the logic behind inefficiency and imbalances. So this is the one I have as I have my eyes on at this point, right? So we have this one, candle 1 and candle 3, and this is actually on a supply zone. Okay, as we make progress, I'll teach you why that is supply. This is actually an order block on a supply zone, right? And then price went into that level, filled the inefficiency, and then sold, continued what? Bearish. At the same point, also creating a what? Inducement for your triple bottom formation. Okay, so it gave you the impression here that it was going to buy, right? And then it sold all the way downwards, just like I'd explained to you earlier before now. Okay, so I don't want to go into analysis yet. I'm just trying to introduce the concept and let you know how they work. Okay, if we begin to scroll all over our charts, we see them happening over and over and over and on. Okay, this is on that area here where price was inefficiently delivered from here to here. Okay, so what did we see in price? Price actually had to go back up to tap in on inefficiency, right? Close the inefficiency and then enjoy the benefits of this zone that was a demand level, a supply level rather, where we had the big guys sitting, okay, and then begin to fall, okay. And then we had the same scenario happen here, right? We had inefficiency of this candle here to this candle here, okay, that was actually filled with this and then still tapped into this new zone that was created and then continued to fall. Okay, but if you just move back and back and back and back on your charts, you see it's inefficiency delivered and price delivery everywhere on your charts. Now, some zones are not, it is not a must that price must cover. If price does not have an order, if there are no pending orders that should be taken out, price will actually let price be until maybe in a future date, when we have an uptrend that will come up here and cover all of this that happened here. Okay, but then until that, I'm just trying to look out for the zones that have been mitigated. All right, good. Okay.
That's a question, sir.
Yeah.
Is inefficiency the same with imbalance?
Imbalance, inefficiency, fair value gap, they're all the same thing.
Okay. Can I take you back to the previous diagram you drew?
Yes. I don't have the diagram anymore. I've deleted it.
When you,
just ask a question.
Okay. Yeah, when you have the demand zone, the big boys created the demand zone and the market went up higher high, higher low, higher high, higher low, and you go to a point, it gives change of character and change of structure. Now, that change of structure, did it come back to that demand zone that time? Well, I call that, is it the same as gap? Is the imbalance
that's not a gap. That's not an imbalance, okay? An imbalance is between candles, not between zones. Okay, so I'll explain all of that when we talk about market structure. I'm not teaching market structure yet. I'm just trying to give you guys a definition of what we're doing. Now, this is actually an example of inducement, right? Make you feel like we are actually going to buy while we are actually selling. Okay, so we trick buyers in here and then we flush them out. That's the case, maybe. Okay, so we had inducements on, we had imbalance on this level, 2 imbalances on this level, right? The first one was here to here, okay, and this one was filled. The second one was here, right, to this other point that was not filled, okay? And probably for some reasons, price refused to fill that. Probably we don't have orders, heavy orders lying at that area. They had mitigated their orders already at this point and continued bearish. However, in the future, when we begin to start an uptrend, price will actually have to fill all of those things, okay? Because we cannot have gaps open. So price will actually fill all of these things in the nearest future and probably take out these equal highs, okay? When we begin to buy, take out these equal highs here, okay? So the concept of absorption, continue upward, take these guys out, and then we'll continue to see more bearish movements in the market. Okay, so I'm just trying to give you an example of what's in imbalances look like. So when you hear about imbalances, fair value gap, and blah, 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 they're all the same. Imbalance, fair value gap, and what's the other word again? Inefficiency. Okay, let's go to step index. Okay, there's something I would like to point out on step index. We had analyzed this, the first introduction we had with the ladies, talking about inefficiency and fair value gaps and all of that. Okay. All right. Now, I was expecting a buy for step index at this point. Okay, because I had my eyes narrowed on a few things. The overall trend, we have been bearish for a while, okay? In the monthly, we bearish, all of those we've been bearish and blah, blah, blah. Okay, even if the buy would hold. Until this morning, I discovered that we had something here that had to be taken out, which was a double bottom. Okay, if the buy had continued as I expected from this point, it would have been a triple bottom. And a triple bottom is what? Inducement. Okay, and the concept of inducement, price must break below to do what? Take out liquidity. Okay, so hence our buy setup was not right. Now, for those of you who are on the subgroup for the ladies, I mentioned something that until my high is taken out, my strong high is taken out on my 1 hour time frame, I do not have enough confirmations for a buy setup. Did I say that right?
Yes, I do.
Yeah, I mentioned that at this, I think at this point when we are consolidating, that until this high is taken out, I do not have a setup. I don't have a confirmation for my sell setup because we have not actually transferred power to the bulls. Okay, so I was just trading on the assumption that we are not going to liquidate this point based on the fact that it was a stronger point. And then we had tons and tons and tons of, I believe, institutional orders at this point. Okay, so when I looked at it properly yesterday and I discovered we had created triple bottom, I actually closed partials on 23 pips, I think on 25 pips profit already, and then I let it run. I just closed the trade. When I closed partials, I discovered I hit my stop loss on the smaller ones to be open, okay? Because the concept of inducement is anything that looks like retail pattern. I told you if the setup is too obvious, if the setup is too sweet, this triple bottom, this market, fine head and shoulder, see this. If the setup is too sweet, it is a trap. If the setup is too amazing, that everybody, now, when you begin to understand smart money concepts and you begin to understand supply and demand, okay, you would see the inducement as a setup that would be sweet for you. Okay, you will see inefficiencies, you will see supply and demand as setups that will be sweet for you. That's different. But then if the setup is a retail setup that the whole world can see, then it is actually a trap. Okay, to lure you into bias, okay, and then knock you out before continuing in your direction. So yes, at the moment, I am willing to begin to look for bias because we had created another form of inducement by virtue of creating this zone here as equal highs, okay? So this level must be taken out. It's the balance of price. You only came down to transfer powers to strong hands and then tap out on liquidity that was resting below this triple bottom formation on a 1 hour time frame. Okay, so I'm not willing to go in heavy on buyers yet until I have this high taken out. I don't want to go in to teach market structure today. I will teach market structure on Monday. Okay, and then after I teach market structure, we are ready to start dissecting smart money concepts. Okay, but then I just wanted to get an insight of what we'll be doing. Okay, so what will actually be triggering my setup on this would be the violation of this. I want to see price take out this primary liquidity. Okay, so I want to expect this to happen. And we should bring me back somewhat inside this zone. It's happening, okay? Bring me back inside of this zone and then continue to the upside. Okay, it may not happen as fine as I expect it to, but something very much similar should happen. Okay, take out that zone and then we trace back into the level before further buys. But I want this zone taken out. That is what will give me extra confidence for the buy. If I choose to drop down to a smaller time frame, I'll actually see an entry right now, but I'm not interested in that at the moment. Okay, let's clear out liquidities and then take out retail and all of that, because at the moment we have already violated a smaller structure, right? We have broken this structure already as a change of character, right? Yeah, so price should continue upward to give us a new break of structure that should form a demand zone that we will trade back into for a buy. Okay. So I'm listening for questions. Now, if you observe, the mood of the analysis has changed. You're no longer looking for support broken tone resistance and resistance broken tone support. It's going to be a lot for you. It's going to be a lot for you just starting. It's going to stress your mind. It's going to confuse you. It's going to make you feel like you don't know what you're doing because you're trying to migrate from you're still in the same country, but a different state of mind. Okay, I don't know if you feel me. We are all together,
Yes.
but then it's a different state of mind in the same country. So just relax. We are still on the charts. We are still doing price. Okay, but then you just try to adjust your state of mind. Okay, make sure you have enough fuel to drive to your state of mind if you have a car, or you have strength to trek to that new. Some of you will actually be flying to the new state of mind. Some of you will be crawling to the new state of mind. The rest of you will be walking to the new state of mind. In all, just make sure you are migrating to this new state of mind. Okay, would help you see price differently and then do things a lot differently. Okay, so
Yes, sir.
that day, the last time I met with the ladies, I told them that price was actually going to come back here and sell off from here. Okay, so I actually had this sellers open on this level, I think on a 3-pip stop loss, which was without drawdown. We sold back to these points. Okay, so we had a 54 pips move down to this point, which was very, very amazing. And I actually had this uploaded on the page for those of you who saw it. Now, why did I say we were coming here for a sale? Irrespective of the fact that price was already printing higher highs and higher lows according to retail. It is because I had inefficiency that had to be filled. Okay. Price had to deliver properly or fill in efficiency in this area and this area. And also we had, I have just 10 minutes, thank God. And also we had this block, this guy here as an order block or a supply block where we have tons of institutional sell orders, okay? I'm not dealing with order blocks today. I'll be dealing with order blocks and market structure in, I'll be introducing order blocks and market structure on Monday. Okay, God willing, if I'm strong enough, we would have classes on Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, in that sessions, I'm expecting you guys to have consolidated, like have fixed your mind on what we have to do. And then on the next week after that, we can go one step at a time. But then I need to bombard you with all of these back to back, so your head to be carried. Okay,
Yes, sir.
now
Yeah.
introduction to order block, just look at it as the last up candle before a break of structure. I can't teach order blocks yet or supply and demand yet until I begin to teach market structure. So that's why I don't want to introduce that, because introducing that must take me to market structure and advanced market structure. So I'm not bringing in that. I just want you to see how price delivers efficiently, closes in inefficiently, forms inducement, takes out inducement, right? So the concept of this that happened here, explained to them, is called trend line liquidity. Trend line liquidity is that we have people who trade trend lines, not like we are taught. Now, people who are taught by me, whenever we see trend lines, we are waiting for price to break it and retest it, right?
Yes, sir.
Okay, but there are people who actually use trend lines as support and resistance. Okay, so they count the touches, first touch, second touch, third touch, and then they wait. If price gets here again, price will touch it and buy. Okay, price will touch it. So actually here, what we did was that we induced them into thinking we are going to buy one more time from this level, and then we actually violated the level. Okay, only to trade back into this order block. I don't want to go into details of order blocks now, and continue downward. Okay, now during the time, some of you messaged me around this period to ask if I was still bullish. And yes, I was still very much bullish. Okay, I had closed out some partials at this point. I closed out some other partials at this point after price retested and created this low, this high here. Okay, so I still made profit overall from whatever happened here in this small buys. Okay, so as we wait for the best moves to happen. Okay, so we had trendline liquidity taken out to the downside, okay, offered liquidity to this area and knocked out the guys who we are waiting to take buyers, and then we continued back to our zone. This zone actually commanded this level of influence because it is actually a demand zone, okay? And then it would have made a fine demand zone if it did not form almost equal lows for me. And then if this guy had not come back here to give me a triple bottom. Okay, so inducement is actually attractive to liquidity. Wherever liquidity sees, wherever price, wherever the big boys sees inducement, they are attracted to those areas because we must always have liquidity lying above inducement. Okay, that is a key you should note. We always have liquidity lying above or below inducement. So this is an inducement. It means we have liquidity lying above here. Okay, we have liquidity lying above here, tons and tons of orders, right? We also have liquidity lying above here, right? That we are taking out. We have those who are waiting for a sell if this place should break, and we sold. Okay, so we trigger the buy for those who touched this, and then we hit their stop loss. We trigger the sell, and then we also hit their stop loss. Okay, so buyers and sellers are in loss at the moment. Apart from those who understand the footprints of smart money, and then we are waiting for them to actually get fully involved so we can follow them and make profit with them. Okay. So anywhere we have, like here we had inducements, we also had liquidity. So price came down, tapped into liquidity, hit the stop loss of those that had their sell orders or buy orders around this area, and then continued to offer bearish. Okay. Now, does everybody understand inducements?
Yes, I got it.
Supply and demand?
Yes,
Okay,
sir.
Okay.
A bit.
Yeah, when we
So I
begin
have
to
a
talk
question.
about structure, I cannot talk about supply and demand without talking about structure and other blocks. So that's why I'm just being conservative. Questions can come in.
How do we know?
Okay.
How do we know the demand zone?
That's why I said
Because
I cannot talk about that till I begin to teach structure. So we're teaching structure on Monday.
Okay.
Yeah.
Okay, sir.
Yeah.
Okay, sir, when we talked about price inefficiency,
Yeah.
in the last class we used, you said that price has to come back and mitigate that zone. But now you're saying price
Yeah.
has to come back and fill the zone. Does it mean the same thing?
Mitigation, retest, fill, they are all the same thing. Intercept,
Okay.
mitigate, fill, close, consume, absorb, whatever. They're all the same thing. I'll use them interwovenly, okay? But then most of the times I'll use mitigation because mitigation is the actual smart money thing.
Okay.
Yeah. Thank you very much.
So sir,
yeah.
Now that we are learning about this whole smart money stuff, is the break and retest still relevant? Should we keep up with the break and retest, or we should apply both this one with the break and retest?
Now, when I was teaching with the ladies, I said, at the end of the day, it will be your choice to make what suits your style of trading. Okay, at the moment, this is where I am, and then at the moment, I'm drawn to supply and demand. Okay, so at the end of the day or in course of the session, so whatever I taught you on break and retest, don't try to analyze or trade anything. You have it in your notes, right? You have the videos, keep it to the side. Okay, now you will learn this one, and after this one, you will look at the both of them. You will ask yourself, which one offers me more profits? Which one reduces my risk? Which one fits my style of trading? Then you will pick one for yourself.
Okay, sir.
Yeah.
Nice one. Thank you. Yeah.
All right then. Any other question? I have just 2 minutes more. No question. All right, guys. I'll just do a few markings very quickly. Now, what did we have here? Very sweet. Trend line liquidity. Okay, price related to the downside. Take out all of these orders that we had pending. And then don't forget that we had equal lows already at this side, so that were yet to be taken out. Okay, and I told you all of these has liquidity line below them. Okay, so let's just make progress. Don't worry. I'll try not to be in so much of a haste, so I don't get you all confused. Okay,
Yes, sir.
we'll do it
Yes,
one
sir.
step at a time.
Yes.
So at the end of the day, we can be making sense out of all of it. I want to believe we are done for today's meeting as we look forward to the session on Monday. Okay.
All right.
Yes, sir.
All right,
Yes,
guys.
sir.
Thank you very much and have an amazing night rest. See you on Monday.
You too.
Thank you
All
too,
right.
sir.
Thank you,
Good
sir.
night.
Sir,
Thank you.
people go Ziggy, yeah?
All right, thank you.
Give it yours.